Welcome to a discussion on asset allocation. In today's video, we're going to talk about what is asset allocation, the benefits of it, and how it's crucial for your financial wellness. Asset allocation is a strategic distribution of your investment across various assets such as stocks, mutual funds, bonds, commodities like gold and silver, and real estate. Essentially, it is the foundation of your investment strategy. If asset allocation is used efficiently, it becomes a very powerful tool to manage risk and returns of your investment portfolio. Let's look at the benefits of asset allocation. 1. Managing your risk. As the cliche goes, you do not put all your eggs in one basket. By distributing your investments across various different assets, you reduce the risk associated with single asset investments. Several of these assets act as a hedge for other assets. For example, bonds and gold is known to act as a hedge for equity investments. These assets provide a cushion or a safety net during turbulent market conditions. Thus, by distributing your investment across assets, you can effectively reduce volatility and reduce your risk. 2. Potentially better returns. By diversifying, you're able to potentially capture gains from various different market segments and market conditions, thereby improving the returns of your overall investment portfolio. Different assets do not move together in the same direction. Even if they do, the quantum of movement is different. For example, debt funds or bonds do much better during interest rate down cycles. Equity funds do much better when the interest rates are low or when the interest rates are rising. By diversifying, you position yourself to take advantage of different market conditions. 3. Preserve your capital. A well-allocated portfolio can help safeguard your capital during market downturns, thereby bringing stability to your portfolio during turbulent times. Now that we've understood the benefits of asset allocation, how do we effectively allocate all your investments? Here's a 3 simple step process. First, define your goals. Define all your future goals and needs. It could be retirement, education, vacation, buying a car, buying a home. Each of these life goals have a different time frame and different risk tolerance. 2. Allocate your assets based on the goals defined. Now that we have defined your goals, your risk tolerance, as well as time horizons, allocate your investments across various assets based on these parameters. Let me give you a few examples. If you were to plan for a retirement fund, you would contribute for about 15-20 years. Post your retirement, the fund has to last for another 20-25 years. So the total duration of the fund is close to 40 to 50 years. Given this timeline, you can allocate a greater percentage of your investments towards more volatile assets such as stocks, ETFs, and mutual funds. These assets give you greater returns over a long period of time, and time itself mitigates the volatility associated with these asset classes. If you were to plan for your own education or your kids' education, you would like to take a more conservative approach because it's a short to medium term goal. In this case, you would like to find a better balance between volatile assets such as stocks, ETF, and mutual funds, and more stable asset classes such as bonds and debt funds. Thus, it is very critical that you allocate assets based on your personal goals. 3. Rebalancing. Over a period of time, your goals could change, or based on the performance of different assets in your portfolio, the asset allocation itself would have deviated from what is initially designed. It is for these reasons that you need to periodically review your portfolio and rebalance them accordingly. At all points of time, your asset allocation should stay aligned with your goals. If you'd like to learn more about rebalancing, click on the video above. In conclusion, by implementing a well thought of asset allocation strategy, you build a strong and potentially more rewarding investment portfolio. If you have any queries, feel free to reach out to us at www.fabits.com. If all of this is confusing, then Fabits is a solution for you. At Fabits, we take care of your asset allocation, making sure your portfolio remains dynamic, to various market conditions. We will also periodically review your portfolio and rebalance it or fine-tune it to ensure it stays aligned to your goals. All you have to do is define your life goals. The rest is taken care by Fabits. Do reach out to us to learn more.